So imagine you have invested into a government scheme. Now you know that there will be safe returns and obviously security is there because it is a sovereign scheme. But after a few years, you got to know that government is thinking about discontinuing the scheme. What will you do? Now that is the case with the sovereign gold bond schemes. There might be a chance that government might discontinue it. My name is Lalit Soni and you are watching InFocus by Drishti IAS. In this episode, we will be talking about the sovereign gold bonds and why government is thinking about discontinuing it. Okay, so title is given over here, why the government could discontinue the sovereign gold scheme. So let's start with the discussion. Here we'll be talking about these few items over here. We'll be talking about the news first and then we'll be moving to the next part, that is basically why the scheme has came all together, what was the objective behind that, so why sovereign gold bonds. Then coming to the next one, what are these bonds? When we talk about the SGB, so what is this scheme? So we'll be talking about that. Then we'll be looking into the benefits, then some government's concern, and in the end there will be an MCQ for your practice. Okay, now before moving further, I would like to tell you that we are having this GS Foundation courses for you in English medium at our Noida center. That is, address is C171/2 Block A Sector 15 Noida. For more information, you can call on this number, that is 9311406440. Other than that, we are having these UPSC GS Foundation courses at different centers of Drishti IAS, that is Prayagraj, Lucknow and Karol Bagh. At Prayagraj, it is starting on 2nd of January 2025 for Hindi and English medium. For Hindi medium, timing is 6 p.m. For English medium, timing is 5:30 p.m. Lucknow Center is starting a course on 23rd December 2024 for Hindi as well as English medium at different timings. Timing is 11:30. Batches will be different. And for the Karol Bagh Center, 23rd December 2024, we are starting an English medium batch at 8 a.m. Okay, so that is there. Other than that, we have this one more initiative for you, that is Sambhav 2025, wherein we will be going for the integrated practice for your prelims as well as of mains. So you will be given 10 daily prelims questions and 2 mains question for your practice every day. You can track your real-time ranking over here. Okay, so you can go to the Drishti IAS website and explore this option as well. Okay, now let's move further and start with the news over here. The government is considering discontinuing the sovereign gold bond scheme due to high cost of financing the scheme. Now they have thought that there will be some benefits. Okay, the return will be there, but considering the return, the cost is high. Okay, so that is one concern, and because of which government might go for the discontinuation. Second is, no SGB issuance has been made in financial year 2024-25 and the gross issuance has been reduced in the current budget as well. So basically, when we are talking about the issuance, there were various tranches in which that used to be there, but in 2024-25 till now there is no issuance. Okay, now coming to the next one, reduction in the gold import duty from 15% to 6% has boosted the demand, fulfilling the scheme's investment objective. The original objective for the scheme was that we will be going for the investment into the gold. Okay, but because of the duty which has been reduced, because of which already, if you talk about the duty, let's say earlier there was this 15% duty which was there. Okay, let's say on the 100 rupees there was 15% duty, so price was 115. Now this duty has been reduced to 6%. Now the price is 106. So because prices has already dropped and because of which there are people who are interested in the investment, so why do you need an extra scheme for that? Okay, so objective is already being fulfilled and because of which government might go for the discontinuation. Now let's see what is this, why this particular scheme has been bought in the first place. So the government of India finances its fiscal deficit through various instruments including dated security, national small savings fund, provident funds, sovereign gold bonds, etc. Now fiscal deficit, let's say in the simple language we can say that whatever government is earning, okay, or you can say government's revenue. Okay, we will be saying the revenue, whatever incomes which is coming in and whatever is the expenditure. If the expenditure is more than the revenue, whatever difference is there, that is basically fiscal deficit. Now, if there is a fiscal deficit, that means that you have to, bridge the gap from somewhere, and government has these schemes over here. Okay, so dated securities, national savings, small savings funds, and provident funds, sovereign gold bonds, etc. Now, one of them is sovereign gold bonds. Other than that, there was this another you can say objective, that was to boost the investment in the form of the paper gold. Okay, not in the physical asset but into the paper gold. Okay, sovereign gold bonds were launched to finance the government's fiscal deficit and to provide a safer, cost effective alternative to the physical gold investment. Now if we talk about the physical gold investment, what happens is that if you are investing into the gold and you are keeping the gold bar at your home, so obviously that will be one of thing is that storage risk is there, first thing. Second thing is that when you are keeping the gold or you are buying the gold, physical gold, that means that you need to have that gold in the market. Okay, for that government has to go for the imports. Government imports the gold, and because of which our trade deficit increases, because import price is increasing, and that is why trade deficit is increasing as well. Now considering that, since when we are talking about the gold is an attractive asset, and that is why people are investing into it. So considering that, government has come up with the idea that you don't have to go for the physical investment, you can earn the same returns on this paper gold as well. Okay, so that is why they have come up with the idea of the sovereign gold bonds. Okay, now what is this scheme? What was the structure? So let's see. It is a debt security issued by the RBI on the behalf of the government. So who is the issuing authority? RBI. On behalf of whom? That is government. Each unit representing a gram of gold. Now one sovereign bond is basically 1 gram of gold. Okay, redeemable in rupees at the market value. Whenever you are going for the redemption, you will be getting the market value. Okay, so you can say, let's say in 2024 you have taken 1 gram of the gold or the one government bond, and the prices are, let's say, around 7,000 rupees per gram. Okay, in 2029 you are going for the you can say redemption of this particular 1 gram. So you will be getting the market price in 2029, whatever market price is there in 2029, that you will be getting. So that is there, let's say at that point of time prices are 9,000 per gram. Okay, so you have earned a return of 2,000 rupees. Along with that, there will be some interest which will be given by the government. Right now that rate is 2.5%, which will be given by the government over here. Okay, now see features. If you talk about fixed interest rate of 2.5% annually, credited semi-annually. Basically interest you will be earning every 6 months. Okay, the tenure is 8 years. When we are talking about this particular bond, tenure is 8 years, but you can redeem it after 5 years. Okay, redemption value based on the average of the gold price of 999 purity for the last 3 days. Okay, so let's say you are going for the redemption on let's say Monday. Okay, let's say Wednesday, you are going for the redemption on the Wednesday. So they will be taking the average of the last 3 days. Okay, that is your Sunday, Monday and Tuesday. But the thing is, Sunday markets are off, so they will be taking the working day. Okay, so they will be taking the Friday or Saturday as the case may be. So they will be taking the 3 working days, and the average of the gold or the market value of the gold in last 3 days, average will be taken, and on that particular price you can sell your bond. Okay, now moving further, what are the benefits? So obviously you don't have to go for the physical investment or the keeping the physical asset at home, so risk is not there, so it is safer, it is cost effective because the storage cost is not there. Okay, and it is alternative to the physical gold. Okay, coming to the next one, investors are assured of the market value of the gold. We have seen that they will be redeemed at the market value at the time of the maturity, and the periodical interest will be given, redeemed in the Indian rupees at the maturity with the value protection against the gold prices fluctuations as well. Okay, offer attractive returns with appreciation over the holding of the period. So that was the idea which was there to give all these benefits. Now what is the concern because of which government might go for discontinuation? First is the high cost of financing the fiscal deficit. Now whatever return they are getting in that particular, with respect to that, the cost of this scheme is higher. Okay, now just to, you can say, providing for the fiscal deficit, if you cannot pay such cost, so this high cost we are trying to, you can say, do away with the high cost of the financing the fiscal deficit. Second is reduction in the tranche from 10 per year to 2 per year. Okay, so basically earlier what used to happen is that, let's say you have to put the sovereign bond worth rupees 1 lakh crore. Okay, now they will be divided in different phases or 10 tranches, okay, per year. So earlier initially there was this 10 tranches per year. Now they have reduced to 2 tranches per year. That means that government is taking a step back as well. Coming to the next one, gold import duty reduction has already increased the gold demand, meeting the scheme's purpose. Recently they have gone for the reduction in the gold import duty from 15% to 6%. Now because of which the prices of the gold has already declined. Okay, prices has declined and the demand has increased. The demand has increased and the prices are declining, so it is an, you can say, opportunity for the investors. So considering that the objective is already being fulfilled, so why have a different scheme for that? Okay, the view that the SGB is an investment option and not a social sector scheme. So if it is not a social sector scheme, that means that government can take a step back, because if it is a investment option and the objective is being fulfilled by another way, so why to waste money on this? Okay, so that can be the rationale to you can say do away with the gold sovereign bonds. Okay, so that is the scheme, that is your gold sovereign bonds, and we have discussed about the reason for the discontinuation as well. So in the future, if you are seeing that the SGB scheme has been discontinued, don't be surprised. Okay, now let's move further and look at the MCQ over here. Which organization issues SGBs on the behalf of the government? SEBI, NABARD, RBI or SBI? Okay, so you can attempt this question and answer to me in the comment box. With that, I would like to take your leave. I'll see you in the next episode. Till then, have a good day. Thank you, and please subscribe the channel.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.